everybody. All right. Microsoft, msft on the NASDAQ Stock Exchange. Let's look at the 10-year chart, monthly candles. And wow, okay, this has been an uptrend for past since 2013. I like to look at previous breakouts patterns, what launched all this. And I know hindsight's 2020, but still like to do some reverse engineering and see how this all panned out. Here I have some support back in the days, 3250. I have support, at around 16, resistance 3215, and the case could have been done for this breakout here on this candle, this arrow here, giving a target of $48, which was reached one year and a half later. So you have a multi-year base, 2008 to 2013, so a 5-year base, and after that took a year and a half to reach its target. So if we would have done this analysis back in the days, let's remove all these candles. Let's imagine that we're back in April 2013. I've identified this resistance here, support here, and I have my alerts. I could even have, this could have been even a tighter rectangle. And let's draw just a line here. Here, copy that. That would have gave us a closer target than the one I jotted out. Because this is still, this could be considered maybe an ascending triangle. 1, 2, yeah, maybe not. All right, let's just go with the smaller rectangle. Would have been conservative. Always, when in doubt, I choose a more conservative target. Nothing wrong with that. Increase your probabilities of reaching your possible target. So right now in April 2013, the month is closed, and we say, okay, we're going to buy. So we put in an order here to buy, put a sell stop at the bottom of the wick here to protect yourself, to lose maximum 1% of your NAV. The delta here, adjust your position size to not lose more than 1% of your net asset value. And you would put your limit stop, your profit stop, at the arrow here. If you would have played the conservative target, if not, you could have put it on top here at the 48. And that's it. You forget you entered, you get triggered out here, or you ride it out to the profit, move on to another stock. Let's say look at the ladder. This would have been the risk 1, and profit. Go here. So the risk to reward, risk 1 to win 1.6, about 1.8. Not a super duper risk to reward. And or else if you would have taken the further target, it would have been 1 to 3. So that's more in line to the risk to reward I look for. But again, higher risk to reward, less probability of reaching that possible target. It's all about choosing the best setup for that. Let's move on to days. All right, let's see what happened. And after that, you're in, and then Microsoft trending. Oh, then trended back here. That's why you have you set your stops and you forget, because on a day like this, month like that, 3 months later, you're starting to lose patience. You're saying, what should I do? Should I just cut my losses right now? Should I? All these questions come into mind. Let's say you risk more than 1% of your NAV, then you're in trouble. Can't whatever reason might happen. That's why you have to just set and forget and move on. And you see over the months, 4, 5, 6, 7, 8, 9 months later, 10, 11. So after 1 year, if you would have taken the conservative target, it would have been triggered out. And after that, add a few more candles. Oh, and there you go. So eventually you get you reach your final target, and you're out. And after that, you just wait for another pattern to emerge. You see right here, I could have seen over this 6-7 month period a continuation, a rectangle, or top rectangles tops being formed. I could have set my alerts here, the 40, close to 49, close to 40. These are the new support and resistance we have. And then, oh, right here, breakout candle. You would have, you could have bought here. Let's see what the implied move was that for that. Implied move would be. Then again, I like it when the longer and the tighter the formation, the more probabilities I have of reaching my target. This is a pattern with a measured move added on. Would it have been an A plus stock I would have gotten into? Probably not. I tried not to take setups under A plus plus. You gotta really not get greedy, not get trigger happy. What I've found out is the more you look at a lot of charts, then you're able to find those A plus pluses, and you don't seem forced to have to play something because you haven't taken a trade in a few months. Take 3-5 trades per year in the past years, and that suits me fine. I want to really choose the crop of the crop. So all right, let's say I would have been trigger happy. I would have entered this, not an A++ setup, but I said, okay, let's do it. An uptrend. Oh, look, you see, I always forget to go look at the RSI, and you could have also seen a case from, well, this is not actually a top yet. I would have had to had a candle, lower candle here, red candle. But there's signs. You see that the RSI is diverging, bearish divergence. So I could have said okay, maybe not get in. Contrary to here, we didn't have any bearish divergence. We had a higher high and higher high here, so it's all good there. And you even had some bullish divergence probably here, right here, lower high and higher low, and you see lower low, but that's some divergence also indicating it's gonna spring back up. All right, this is kind of messy here, but let's just jaw down. See what's gonna happen next for that next move. What moves up, and still in the trade. And here we're triggered out. So you see that continuation pattern actually resolved to the upside. You would have taken your profit here at 57, and then you would have waited for another pattern to emerge. Actually, while it was reaching its target, there was another pattern here you could have played. Trotting out, draw another line, another target. So this Microsoft, a lot of continuation patterns within that uptrend. And see, 1 month later, 1, 2, 3 months later, target reach. Nice. Move on. Still uptrend. No classical chart pattern on the monthly, and that's where it is today. Give myself a little room. See if I could recenter that. There you go. Wow, it's a war zone here. Let's remove all trend lines. And that's where Microsoft is at 90. There's no maybe here. We have to wait for a few more candles maybe to see if this is where the resistance is, and see if it's going to test the support, and see if we either have a top for a continuation move, or we have a bottom for a retrace going downwards. Nothing to see here right now, even from that top to high. The RSI, no divergence, no bearish divergence. Full steam ahead for Microsoft. Just wait and wait for a pattern to emerge and see if you're able to enter according to your risk and money management protocols. All right. Thank you and see you soon. Bye bye.